Trading Market Technicals morning call video for Tuesday, October the 1st. Well, we finally got through September, end of the month, end of the quarter window dressing, but we did get a down day. We marked another 8 out of 7 days down. Dow Jones down 128, NASDAQ down 10, S&P down 10, and the Russell down 40 cents. By far the strongest of the 5 indices that we follow. A lot of people that are investing in the Russell are overlooking what's going on here about the fiscal cliff and the government shutdown, and is really just hanging in there. Pretty amazing stuff. But the Russell is giving us a little bit of a bullish sign here that we may indeed continue this rally. Now, very, very early to tell. Really not telling us anything here, but I do want to go through some indicators. I want to show you some potential bounce areas where we are. And my idea and what I'm looking at here is that we are up right now, even though we do have a partially government that has shut down some of the lesser departments that are basically okay to function, obviously running the country. But we do have a partial shutdown, and the markets are up again, and that's basically possibly for the uncertainty. The markets do not like uncertainty, and also I think part of the selling was due to portfolio adjustments. Again, locking in some of the gains of the quarter that a lot of the mutual funds want to instill for their customers. So today, tomorrow, it would not surprise me if we do get a little bit of a bounce, maybe even into Thursday. But we will see, right? Anything can happen. We don't want to assume anything is going to happen, that we're going to rally. But it does look like we're in a spot where we can bounce. We can bounce today and tomorrow, and then we would reevaluate it. We are down 8 out of 7 days, so it's a logical spot for a rally. We are a bit oversold in the intraday charts, the 15 to 30 to 60-minute charts, which I'll show you. But pretty interesting stuff with the Russell. All right, so let's get right into the indicators. We are still on a sell signal in the bullish percent bullish percent S&P. As you can see here, we are on a sell signal, and if you want to look at it, you can even see an inverted. You could even see a head and shoulders pattern here. Left shoulder, head, right shoulder, and a slanted neckline here, where we just actually broke down, and it's the S&P line chart versus the bullish percent S&P. So we are still on a sell signal. We did try to break out, but then we failed again. So let's see if we can snap this and get back up again for 2 days. I think this is just going to be a bunch of chop in the next few days. Ultimately, I do see us heading lower at least one more time, breaking down, and I'll show you where I think the ultimate spot is going to be on the daily charts here. Okay, want to take a look at a couple other bullish percent, and this is going to be. This is going to be the financials, bullish percent financials. And what I did do here is I did label a head, left shoulder, right shoulder, which we did trigger. You can see this clearly. This is a head and shoulders pattern on the XLF. And I'll show that to you again on the chart itself, this is the line chart. Now, without the financials participating in any type of rally or even a retracement rally, I think you're going to have a very shallow pullback, very shallow retracement rally, and I think that the markets will probably end up selling off if the financials can't hold up. Now, the technology sector, the semis, are holding up relatively well, but still, guys, we need the financials to participate in any type of rally to even think about challenging the highs. But we're really not that far away from the highs. But again, if you want to see good rally and good taking out of the highs, we need to see the financials participate. And as you can see here, we are right now on a sell signal, although we have just flatlined here the last day or so. But still, guys, we are on a sell signal. We have a head and shoulders pattern. We need to really revert right back up and break back through this neckline, and then rally and take out the head here. Okay, but again, this is not a good sign. That's not what we want to see. All right, let's take a look at. Before I get into gold and oil, I just want to show you the NYMO. We are now at -6. Again, neutral. This is the bigger picture, overbought, oversold in the markets, and this here has plenty of room to run to the downside. So this is why I'm not so crazy about what I'm saying is that I think we do have retracement. We have a little bit of a pop up, and why also is that we have the start of the first 2 days. Mutual funds have to put new inflows of money to work, and they're going to do that by buying quality stocks. And I say that if you are looking to buy stocks, you want to buy quality stocks that held up in this last 8-day pullback. So that is what you want to do, because if markets do roll over, you're not going to be decimated by your account by a stock that you're buying on weakness, and the market just will continue to be weak in that stock. So you always want to buy strong stocks. You always want to short weak stocks. And that's what the market is going to do, and that's what the big players are going to be doing. So that's why I would see a bounce here Monday and Tuesday, and then reevaluate. And it could go all the way up until Friday. But I do think that we retrace, and then we would sell off again one more time. Again, that doesn't have to happen. This is just what I've seen in the past. Okay, so now we have New York Stock Exchange new low, relatively quiet, 8 days down, and look at this. This is a very bullish sign that we really haven't had too many new lows. And this is usually when the markets were to sell off this big. And we only had a 3-4 day sell off here. And look what happened. We spiked immensely. And here, 8 days, just about 8 out of 7 days down. 7 out of 8 days down. And look at what we have here. We have really nothing happening here. So pretty amazing stuff here. This is actually very bullish. And this is why I would say any little bullish sign, or any sign that the government is going to put this to bed, this terrible thing that's going on here, just a debacle in the U.S. government. But if they start putting this to bed, or at least kick the can down the road for another year, I think you're going to see a big pop up, not in the new lows, but in equities here. So this is a good sign here that we haven't really sold off too much, and we haven't really made new lows. So keep an eye on that. Now, obviously the VIX did spike up. But let me show you about the VIX, and there's another reason why I think that we would rally here. Black candle out of the Bollinger Bands. Now, if we open up in equities and we open down here in the VIX, that's going to produce a buy signal in equities for not only just not for today but for tomorrow. We need a closing candle in the Bollinger Band, and that would produce a bullish sign for equities and a sell signal for the VIX again. Okay, so this is a very good sign here that we possibly bounce today, and going into tomorrow and Thursday. All right, so now let's take a look at the VIX. And now we have one more thing I want to show you. We'll get right into okay, so let's go right into gold. So we have gold here. And I wanted to show you gold because gold has been bouncing up and down to what's happening here, risk on, risk off. I love gold here short, up in here is 1416, 1425 area. I just think that gold is done, at least until this at least challenges the lows here. And when that happens, this is where you want to buy gold. Can it happen? Who knows? But I do think that we're going to get a real nasty sell-off in gold at one point in time before gold goes higher again. And that's the spot, guys, 1100 to 1175. That is the spot. Now, there's the daily chart. Let me just let me show you the weekly, and I'll show you the monthly. Right in here, as you can see here, we really haven't gotten past 1416. Anything here 1416 or up in here, and as you can see here, a 50 and a 200 day is almost producing a death cross. And this is on a weekly chart, so this is going to take a little more time. But even if the market pops up, this 50-day moving average is even if price came up to here, the 50-day moving average will continue to come lower. Okay, so this here is not a good sign, and that's why I like gold to the downside. And I'll show you again the monthly chart. We are in a bear market here. We had crossed here the 8 and 21 on a monthly chart back in 2002, produced a bull market run, had a great run. Now it's time for bears to step in, and sure enough, we now have a bearish signal here, which put gold in a bear market. So any rallies up into these areas here, 1415, 1416, will be definitely a good short area. And that's what I'm looking for. All right, now when it gets there, obviously things can change. All right, so now let's take a look at the USO. Now, this is interesting. Here is where my first buy-in, where I would like to buy the USO or WTI, whatever you're trading. Because why? Right now, easy to manage. You're basically the low of this candle would be your stop, give or take, depending on your trading size and your trading plan. But this is a good spot. So let's see what happens today. If we can take out today's high in here in the USO, I'll be looking to buy some USO. Right now would be for a day trade, but if USO really starts to pick up, maybe do some out of the money calls going into like January or October. I'm sorry, November, December, somewhere in that area. But this isn't a good spot here for your short. This is a good stop, and takes out the high here. Look to buy some USO. And again, we're bullish on the bullish percent, right? We do have a buy signal. Now, I would have liked to see this whole area happen down here, but again, can't always get what you want. So, and the RSI is not even overbought yet. So this here is a good spot. And let me show you WTI. Let me just show you the crude oil. Again, really looking, mimics the USO. But you can see crude oil here, back down here into this range. Now, if we break this area, you're going to get a better spot to get down to the 200-day moving average, which would coincide nicely with this horizontal trend line here, okay? And again, we're overbought. But if you look at the stochastics, the slow stochastics really haven't really turned up. Here we're overbought. We really need to get back above 20. So this might chop around for a day or two. No need to go rush into buying the USO here, or crude, if you could see. We still have a little more time here, so let's just keep an eye on that, and I'll show you the charts now. All right, so here's the GLD. GLD, again, preferably right up into the 137 to the 140 area, which would entice me to start legging into a short position in the GLD. Now, in the USO, as you can see here, here is the 14.3 stochastics. Now, I like to see it breach and start breaking above 20, and then that would be a better long signal. But again, if you wanted to take it early, make sure you take it above 37.05, and that would at least see some momentum, because right now we have everything against us. We have the 8 against us, the 20 against us, right? The 50 is right up in here underneath this horizontal trend line. So everything is pointing lower. We really there's a lot of work to be done to push up. But if you are going to take it for a retracement rally, you can at least get, your targets would be somewhere around $38, $39, somewhere in this area here, and then you would reevaluate it, okay? But it is a good spot to get started, and your risk would be right around 36, 36.30, 36.25, and then you would look to reevaluate. If it broke that area, if it broke this level down, then I would expect the $35, which would be the 200-day moving average in USO. Okay, we are right now sitting right around the 61.8% retracement from here to here. So this is a good spot for a bounce, guys. Like I said, you see that the spiders did manage to hold in as it broke the 50-day moving average. So this is a good spot. But look what's happening here. We're still way below. We're unwinding our overbought reading. Yes, that is correct. However, we have some increase in volume, which is not a good sign. But let's see if we can at least chop around here, maybe slightly up today, and then maybe we get some sort of a push up for a retracement rally. But right here, this is a good sign. This is where you want to start looking for a bounce in here again. And I would just visualize this as just a retracement rally until we see how this rally is handled. As you remember, on Thursday, was it Thursday? Yes, on Thursday we had that little pop up. It was really on nothing. It had no volume. It had no oomph to it. There was nothing really exciting about it. So we did pop up, but it was on nothing. And look what happened. Sure enough, we had a down day on Friday, and then we moved lower on Monday. Here is the spiders, again, just kind of drifting lower here. The whole move on this whole 8 days, believe it or not, has been relatively quiet and very contained. Although fear started creeping in yesterday, because the market was down on the opening and a lot of retail sold into that. This, to me, this is very bullish, at least a bullish sign that if the market can gain a little bit of steam to the upside, we could definitely push up higher into the 170-ish area, maybe even 171, and again, 1700 in the minis, I would imagine, is not out of the norm here. Here is the diamonds. Again, diamonds really getting clobbered here. This is definitely the weakest of the 5. But again, unwinding our overboard, so this is kind of a good thing. And this actually is not bad. You know, we've come really, really far and fast, and it's time. It was due for some sort of a pullback. I think ultimately you're gonna get a test close to or at the 200-day moving average in all of the indices that I'm showing you at one point in time. Now, again, that doesn't have to happen. I'm just saying that's what I'm assuming, and it absolutely means nothing in trading. But what I've seen in the past, we bounce back up, maybe back test here and fail one more time, maybe into the zone, and then the 200-day catches it. So I would look for anywhere in here, 147. We're not that far away. We're only about 80 cents. Don't forget the 200-day continues to move up as the market is moving along here. So maybe the 200 catches this, and we bounce up and really get one more scare going into October. Here's the IWMs. Again, hold up really well. Real bullish sign. Once the market uncertainty subsides, this I think is going to really take out the highs and move higher. And watch that Russell, because when a Russell does that, I believe it's going to pull everything else with it. Here's the transports. Transports holding up okay, considering we're above the we're above the 20, above the 50, way above the 200, and we are above our November 2012 uptrend line. So holding up well here. Watch this too, because if the transports and a Russell, which are two of the leaders, can actually start to lead and start taking this out, then I think that you're going to get a bigger push higher. Okay, so this is interesting here. Good stuff. This is definitely in the bullish camp. And of course, Goldman, we talked about the banks earlier. This is definitely not what you want to see. Okay, not that the market cannot rally, but I think your market will be a little bit of a weaker rally than having the banks participate in the rally. So let's see what happens. Maybe we can catch this area here. But Goldman is coming into some support here. Okay, if we can get above yesterday's high of 159.30, call it, then I think we can get a decent retracement rally here. But watch, the 8 and 20 starting to cross over, and we're below the 50. So again, everything would just be a retracement rally because we have the moving averages moving lower as prices moving up. Okay, and we did have a big increase in volume on Goldman Sachs. And again, here is the XLF. This is critical juncture here. We are sitting on the November 2012 uptrend line. We're going to need to hold, and we need to start taking out yesterday's high and start to move higher. But the problem is, as you can see, the moving averages are against us. We have the 20 below. We're below the 50. We are above the 200, but we're going to really need to hold this. And as you can see, we're not quite really sitting on above the 20, which is okay. I'd rather see this now start to curl back up again. This will unwind that overbought reading that we had, and if the MACD can really start to twist higher, then you could see some additional strength in the banks and financials. Apple here, what can I say about Apple? Really not much. Nothing has changed. I think it's just a big mess. I like to see Apple dip one more time lower, get one more big push lower, and then I would start accumulating Apple going into the holiday season. Until then, Apple needs to prove itself on price that indeed it's going to move higher. Right now, Apple's a big mess here, so I wouldn't even touch it. I wouldn't even day trade it. And lastly is the Qs. And you can see the Qs actually held up well. Tech is holding up well. We just need the banks and the financials to start moving along with it. All right, guys, be safe out there. I'd be looking for some sort of a bounce for a couple days. New money coming in with mutual fund inflows today and tomorrow. So I would suspect some sort of a rally. I'd be looking, let the market open, see if it can hold. And if it starts holding some critical points in the morning pre-market session, then it would be a pretty safe bet to be looking to buy on any weakness here during the course of the trading day. Have a great day, and we'll speak to you tomorrow. Take care.